Are you ready to learn how to profitably trade SPX options without having to watch the market all day? If so, you're in the right place. Now today, I'm going to share a simple yet powerful trading blueprint that's perfect for beginners or anyone who wants to trade smarter but not harder. This strategy only takes a few minutes per week to implement, so you can spend less time glued to your screen and more time living your life, working your day job, or enjoying retirement. Now we're going to break down how to use the alpha crunching TTR indicator for making confident trade decisions, as well as look at the historical performance of today's strategy. Now let's dive into the strategy and get you trading successfully from day one. So the first part of our blueprint for trading SPX options, we're going to log into alphacrunching.com and we're going to go to the TTR data. This is the TTR indicator, and really what it is statistics about how often the market lately has been closing higher or not the following day. So TTR actually stands for tomorrow's triumph rate, which is the historical percentage of time SPX has closed higher the next day over the past couple of months. And we're going to focus in on Monday real quick, but you can see for the week of October 21st, Monday had a TTR of 63%. That means over the past couple of months, Monday has closed higher the following day, meaning Tuesday has closed higher 63% of the time. So when we're trading a strategy, we want the confidence that we know where we think the market is going to go, or more importantly, with credit spreads, which what we're going to talk about here is where we think the market won't go. So the TTR is the first indicator or first statistic we're going to look at so we can make a trade that we think the market's going to close higher on Tuesday. Now, the next thing we want to look at is the daily chart of SPX, and we just want to make sure that SPX is trading above its 20-day simple moving average. That's another indication that the market may be in a bearish mode. If it's not, if it's below, we can see if we zoom out a little bit, the market, when it's in an uptrend, will be above the 20 SMA, and as it pulls back, it gets below. So those two combinations of, how often the market closes higher on Tuesday and is the market above the 20 SMA, those are really all the criteria we need. And this is why it only takes a few minutes a week to implement this strategy. Now for the TTR, this data comes out before the trading week begins. So on Sunday, you can look at this real quick and say, okay, is Monday above 60%? That's the value we really want. That's telling us that more often than not, Tuesday closes higher. If that value is above 60% and it's increasing or flat from the previous week, we know that the odds are in our favor that Tuesday is going to close higher. So again, this is only a 5-minute check we can do on Sunday. And then on Monday, we would simply check the simple moving averages. So let's take a look at the performance of this particular strategy. Again, we're just focused on Monday right now, and we're going to be selling a put credit spread that expires on Tuesday, and we're going to see what that looks like. So I'm going to hop into my backtest program, Option Omega, and we can see that over the past, it's almost 2 years now, this strategy has an 81% win rate, trading 3 spreads at a time. This made just over $10,000. And what we're trying to do is keep a decent risk reward. So I like to trade at the money options where I get a nice risk reward of 3 to 2. If you're an option trader already, maybe you want to sell farther out of the money to sort of increase that win rate. What I've found though is that the risk reward and this particular win rate really works better. You might be able to increase the win rate, but you're definitely going to reduce the profitability, because if you sell farther out of the money, you're going to have larger losses essentially. So again, here's the P&L curve. Notice how there are periods of time where the trade wasn't taken. So this is one of the edges of the strategy, is to know, well, when should we take this trade? We shouldn't take it all the time, because there are downtrends and things in the market that we want to avoid placing a trade that makes money if the market closes higher the following day. So the alpha crunching TTR combined with that 20 SMA is just a real quick check to get the odds in your favor on whether or not you should take that trade or not. So again, the blueprint or the routine for the strategy is you log into Alpha Crunching on Sunday. If the TTR for the next day, that Monday, is above 60% and flat or increasing from the previous week, then we look to take that at the money spread at the end of the day if the market's trading above the 20-day moving average. Again, this has an 81% win rate, and we can see a pretty decent P&L curve. So let me know if you have any questions in the comments, and we'll see you in the next video.